Some of this may have been political. It's clear that this isn't just a one-party problem. They may have thought, hey, this is going to be a big story. If it's denied, it'll have legs, big asset managers will be involved, and we can't be seen as this anti-crypto. I believe there has been a huge shift in Washington when it comes to crypto. I believe this is because traditional Wall Street wants a piece of the money that crypto is making. It's no accident that Schumer is from New York and that the financial services industry gave him the most money for his campaign. I just think that crypto and traditional Wall Street have formed an odd, uneasy alliance that will help the industry grow. When the U.S. Securities and Exchange Commission (SEC) asked exchanges to update 19 before filings on an accelerated basis for spot Ethereum ETFs, investors were completely caught off guard. CoinDesk broke the news on Monday, saying that the SEC asked aspiring Ethereum exchange-traded fund exchanges to update the filings before the May 23 deadline. This was a huge change in tone from what the SEC had said before. All but ignored the applications for months. However, issuers also need their S1 applications approved before the launch, which could take an endless amount of time. Senior Bloomberg ETF analyst Balchunas says this development shows that the SEC may be ready to approve the spot Ethereum ETF applications. In a tweet posted on Monday, the ETF analyst said he and his Bloomberg colleague James Seifert were raising their approval odds for the applications from 25% to 75%. Eric joined Laura Shin and Matt Hogan for a talk on Tuesday. Hogan is a crypto enthusiast and the CIO of Bitwise, which has an application for a spot Ethereum ETF before the SEC. As they talk, the three of them guess about the political reasons behind the SEC's quick change of heart. It's no secret that the cryptocurrency industry has become a big campaign issue in the U.S. Earlier this month, I spoke to a group of people who support crypto. Former President Donald Trump told people who support crypto to vote for him in November and made fun of Vice President Joe Biden for not knowing much about the field. Trump also said a few days later that his campaign would accept cryptocurrency donations. Christian Carlo, former chairman of the Commodity Futures Trading Commission (CFTC), called Trump America's first crypto president and said that the former president had played a key role in the cryptocurrency industry. Hogan says that big Wall Street players are becoming more interested in the cryptocurrency industry and putting a lot of pressure on regulators to give the industry more legitimacy in the U.S. As we show you clips from the very insightful discussion, please take a moment to like this video, subscribe to the channel, and turn on post notifications to see more videos like this. Thanks for watching and enjoy the video. I almost fell out of my chair when I first heard about it, a little while before the news came out. At first I thought it didn't make sense because everyone you talked to said the SEC hadn't said anything. To me, silence is bad because in all the Bitcoin cycles they were silent, then delayed, then denied. So silence means we're not doing this while communication means we are doing this. That's where our pessimism came from, but I have to think that some of it was political. Clearly this is an issue that's moving away from one party, and they may have been thinking, this is going to be a huge story. If it's denied, it'll have legs, big asset managers involved. And they may be thinking we can't be seen as this anti-crypto as my thesis goes. Everything else pointed to denial, and the people I talked to were also shocked. These are people who have been working on this for a while. So I will have to eat a lot of crow because I said that. Credits to James Safeguard, who kept this at 25% odds. I would have gone as low as 10 or 5, but he said no, just keep it at 25. Thanks, James, but I think I can rest assured that many articles came out in the last month that said issuers were saying it doesn't look good. There were a lot of voices and sources that said it, so I'm pleasantly shocked. This is a much more fun shock than the opposite, which would be if we were bullish on Bitcoin on the spot and they didn't approve it. This is I was personally forward. I think ETFs are great. They could track anything pretty much, so I was like, this should happen. I was just trying to be right, and what we were, all the signs pointed to no. So it sounds like it was the last minute decision. To be honest, I'll build on the SAB 121 comment, which is, I think there has been a complete sea change in Washington around crypto. I think the reason for it is that traditional Wall Street wants in on the money that crypto is making. If you remember, shortly after the Bitcoin ETF launch, a panoply of Wall Street lobbying organizations, the ABA and others, put out a letter requesting the ability to enter the custody space. I think they saw the amount of money that could be made in custody and could be made in stable coins. And I think Wall Street is now pushing for crypto legislation and regulation that would allow them to compete in this marketplace. And I think that's the change that happens. You had Wall Street fighting crypto, and then BlackRock came in the ETFs where a success Tether is making more money than Goldman Sachs, and now you have Wall Street wanting to get in on that. And it's no coincidence that Schumer is located in New York that the financial services industry is the #1 donor to his campaign. I just think there's this unusual, uneasy alliance that emerged between crypto and traditional Wall Street that is going to lift the industry higher, and if we continue to see these sorts of wins go, and I think the same thing is happening on stablecoin legislation, right? This is not just SAB 121 that's like the canary in the coal mine. This is a complete shift in favor of certain parts of, let's say, the emerging regulated parts of crypto, which seem to be Bitcoin, possibly Ethereum, certainly custody, and I would say stable coins. I think those are entering the mainstream end. I think it's a complete game changer for the industry. On May 16, 2024, the U.S. Senate voted 60-38 to repeal the SEC Staff Accounting Bulletin 121 SAB 121. This regulation was initially designed to enforce stringent accounting and disclosure requirements on companies holding digital assets for their customers. The SEC's rules were intended to enhance transparency and improve risk management practices in the crypto industry, thereby protecting investors and maintaining market integrity. However, the implementation of SB 121 caused worry in the crypto industry. Many stakeholders saw it as an overreach by the SEC, saying it put too many restrictions on companies and could stop new ideas from coming up. The repeal of SB 121 shows that there is still a lot of disagreement about how much regulation the crypto business should have. The fact that both Democrats and Republicans agreed that the rule should be thrown out shows that both parties understand the risks of too much regulation. This is an attempt to make the regulatory environment more fair. This is a big step forward for the crypto industry, which wants a regulatory framework that keeps investors safe without stifling new ideas. We still don't know if the move was made for political or financial reasons, but it's great for the cryptocurrency business. Let's go back to the interview where Eric and Hugin talk about when they think the products will be approved and how good they will be compared to spot Bitcoin ETFs. This has to be some time for that. I would think normally this would have happened already. That's what we haven't had. There's been no communication, so this is all very weird, but my guess is, remember Matt, we were on a podcast together, it was, with the guy from Valkyrie, and he was saying that they might approve 19 before, and that take a month for the S1s. It didn't turn out that way, but the mechanics of that could be what we see here. I think just the outlook in general for them, I'm mild on Matt, may have a great counter take to this, but I don't see them assuming they launch and they're out. They're trading, I don't see them getting more than 10% of the assets that's in the spot Bitcoin. It's possible, well, I would say that 10% is 50 billion is pretty good. That's 5 billion. That's it. I mean, all the numbers are so wild. Everybody's gotten so spoiled to these big numbers. But like even 5 billion would be a major deal. So, but I just see them as 10%, maybe 15%. So when it comes to this area, it's good having choice, great. I don't know if it will be as exciting as their flows won't be as big. I think for that, for the normal person one's enough, right? And this is the one they know is like the gold. And so I think that's going to satiate most of the normal people. You'd have to really have a bull case for this other one to buy it, in my opinion, that would be specific to that. Whereas I think most just are satisfied with the one I would add. I mean, I've previously said that I thought spot Ethereum ETFs would gather more assets, and indeed the ecosystem of crypto ETFs would gather more assets if Ethereum ETFs were approved in, let's say, December or January, because I think we need, Bitcoin ETFs still need some time to cook their way.